Hi everybody, this is AJ with Succeed in Finance. Welcome back to the channel. In this video we are going to talk about moving average convergence divergence, MACD or MACD. It's a very popular indicator. Most probably you've heard already about this indicator. Most of the traders, investors, analysts, they're using it, and we are going to discuss what are its main features, what it represents, what are the advantages and disadvantages in using this indicator, and I would say the best way to use MACD. If you're new to the channel, please consider subscribing, hit the like button to support us, and also ring the notification bell in order to not miss any future video from our channel. Okay, let's take a look at the charts. What MACD represents. Actually, it's a pretty simple indicator. The MACD actually represents the difference between two moving averages. The standard setup for MACD for MACD is using these two moving averages, 12 period exponential moving average and 26 period exponential moving average. If you haven't yet watched, I highly recommend to do so. Watch my previous video about moving averages, what they represent. So I will assume that you know what is moving averages. So this indicator MACD represents a difference between two moving averages. But where is the interesting part? So once again, usually MACD is below the price chart, and it is oscillating around the zero level. What we have, these MACD histograms, these pillars, represents at any point the difference between these two moving averages. So in this way, what we have here, take a look and focus at the difference at this area between these two moving averages. When we have a definitely downtrend, it is pretty normal. The shortest moving average is going to move closer to the prices, and the long period 26 period moving average is going to be a bit in delay. So in this way we have this area, and during the downtrend these differences are going to spread, they are going to increase. And how we analyze, how we think using this indicator, when we have a downtrend and this downtrend it accelerates, we are going to have a MACD histogram with the going down and down pillars in MACD. When this downtrend is over, what we are going to see, we are going to see increasing of these pillars, and once we have a crossing between the two moving averages, we are having classic buy signal, potential buy signal, and since then we are going to see what MACD histogram where already is going to be above zero level. Until these pillars, until these pillars in MACD histogram, until they increase, we are going to say that we have an uptrend, and this uptrend is accelerating. This is going to continue until the moment when we have the so-called divergence. And here is the moment what I would like to stress. Actually, catching up divergence with MACD indicator is actually the best way to use this indicator. What are divergences? Take a look again right here. We know that according to the classical technical analysis Dow theory, we follow the price chart in this way. Until we have lower lows in the price chart, we are saying that we have a downtrend, and this downtrend is strong. It continues to go in this direction. The bears are the strongest participant in the market, but this continues until this moment. Take a look right here between these two low prices. At this moment, what we have here, we have a lower low in the price chart, but when we put MACD histogram, when we put MACD histogram between these 2 points, what we have here, we have a higher low in MACD histogram. This moment is the so-called divergency. In other words, this is a discrepancy between the real price charts and the indicator. What it shows us, in opposite to this moment, when the trend is accelerating in the direction here in this particular case going down, we are saying that the market is strong, the trend is strong, downtrend is strong, but here we have something different. Yeah, the bears continues to reach lower prices, but actually this indicator shows us that actually this trend is more probably exhausted, and we are going to experience a reversal. Most probably we are going to experience the reversal. This is something that is why this divergency is so precious when you are when you are trading on the financial markets, because it is without these indicators, without catching up this divergency, it is going to be pretty difficult to find the moment when we have reversals on in the main trend. Let's take a look a little bit further. What's happening from this moment on? From this moment, we are saying that we are in an uptrend, and until we have these rising up pillars in the MACD histogram, we are saying that the market is in an uptrend, and what we have to take a look when we have such a strong uptrend. Pay attention again to this moment. Here we've got again a higher highs in the prices. The market continues to reach new highs, but here in MACD histogram, what we have here, take a look at this moment. Here we have a lower high in MACD histogram. What does it mean? It means that most probably this uptrend is already close to its end, because most probably this uptrend is already exhausted. The leading group, in this case the bulls, the buyers, are already a bit exhausted, and most probably we are going to experience some kind of reversal, or at least stopping of this uptrend. And based on this, we have to take the we have to take our decisions accordingly, whether we should close our long positions, or we may start to consider new sell positions, whatever it is. But we have this indicator is helping us to discover this moment, because without this indicator it's really difficult to catch at this moment, to catch this potential reversal in the trend. So this is the main the best way to use indicator MACD. Some let me put some features also about the disadvantages of using MACD. Pay attention that MACD is a, first of all, trend indicator. It works mostly when we have definite trends, up or down, but we have definitely the market is moving in a direction, whatever it is, if it is uptrend or if it is downtrend, but we can see clearly that there is a obvious movement on the market. If the market is moving just sideways, just up and down without any clear direction, then if you use this indicator, pay attention that this indicator is going to give you some false signals. So be aware of this and use this indicator correctly. As I said, the best feature of this indicator is to catch divergences on existing trends. Okay guys, there are also many things that can be said about the MACD. Probably in future videos I will cover some more features about this indicator. I hope you found value in this video. Please subscribe to the channel, hit the like button, and see you in the next video. Take care. Bye bye.